I think the first thing is almost everybody's underweighted China. So if you look by any of the benchmarks relative to world capitalization, and it's also a normal thing because over periods of time, the reserve currency, everybody wants to save in it, the world capital markets, you invest there. So it's underweighted. The first move is to get exposure to China, to get exposure in a diversified portfolio. That means to achieve the right kind of balance of assets in China. Our approach is, we call it an all-weather approach. It's a certain balance in which you achieve balance without lowering the expected return. From that, you want to make the tactical moves. And of course, those change depending on the relative pricing of assets, classes, and so on. But first, to get the exposure, I believe, to those markets and the currency too.
Right, we have 2 minutes to break, Mr. Dalio. So very quickly, I want to squeeze in a question on India, because how do you look at the India versus China story, given your interaction with Prime Minister Narendra Modi, as part of your Asia outlook?
Well, Asia, like China, is a country of tremendous potential. I would say the biggest problem has been the lagging behind in the development of the capital markets. There's much less liquidity in those markets, much less developed. And I would say that's the main process. There are opportunities in terms of many cutting edge technologies that are coming out of India, a lot of entrepreneurship and so on. Interesting, but it's tougher to invest in. If there was a much greater development of the capital markets, more liquidity, more opening up of those markets, that would revitalize entrepreneurship and capitalism of being able to raise money in that way and circulate money in a more efficient way would revitalize the Indian economy. I think that's the area that it's behind. But otherwise, I'm very optimistic for India.